The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. I'm going to be sitting in for Tom O'Brien at 3 o'clock today to take care of his show because he's still on holiday. So I wanted to alert you to that. First chart that I've posted in here today is for the euro. That seems to be what everybody's really talking about. And frankly, I don't think that's where the real interest is. But anyway, we'll take a look at the euro here. We really didn't even take out last week's low. We went down and almost matched it, and then we rallied up to the 786 retracement of the high that we made on Friday, and we sold off a little bit. This is a long-term weekly chart, and it certainly looks like we are heading down towards the level of par, which is what we've been thinking about all along. There's two things on this chart that make you believe that that's where it wants to go. First of all, you'll see that we made that bottom way back in March, back on March 3rd. And here we are, March, April, May, June, July. We're 5 months. We've had a 5-month rally, and we haven't gone anywhere. I mean, that hasn't even been a 382 rally. This has got to be one of the weaker rallies on a technical chart that you'll ever see. This tells you that this market usually will work lower, not being able to rally off of a low like that. So this is why I think we are going to be looking at much lower prices in the euro. I don't think it has anything to do with Greece. I mean, Greece is a very small percentage of the euro. I think it's around 3% of the European Economic Union, so I don't think that's very much. The real problem, my friends, I think happens to lie in China. Here you have the third largest stock exchange in the world. You have the New York Stock Exchange #1. You have the NASDAQ is #2. Shanghai is #3. And Japan is #4. I believe Hong Kong is #5. And the rest of them, fall into place. The Brazilian market is in there somewhere. Germany's not even in the top 10, which is kind of surprising. The UK is. So this is the thing that really bothers me more than anything else. And as you can see here, I'm going to post a chart on the, I've done this before because this is an old chart, but this shows you the long-term things that are happening on the stock chart. We're seeing what's happening. You'll see here you have the Chinese stock market went and made an exact 61% retracement back on April 30th. Folks, that number that you see at 0.618, that was a absolutely perfect number to the decimal place, to the second decimal, to the 100th decimal spot. So it was perfect. And now we've come off 30%, and we've done it in very, very dramatic fashion. China has, hold on one second, please. China has imposed a moratorium on IPOs, which will prevent more money going into IPOs as opposed to speculation. And the 21 largest brokers in China got together, and they put together a pool of $19 billion to stop this flow of downflow in the market. Now, 19 billion is not very much when you consider that they've lost $2 trillion since April 30th, and it's just starting. Now, last night, the Chinese market had its biggest day in history on the opening. It was up 7.8%. That was equivalent to what happened when we had Desert Storm, when we were sitting in the sewer and stocks, and then we had that one-day war back in January of '91. Our market opened up almost 8%. We've still never filled that gap in the Dow, down around 26 or 2,700. I don't remember exactly where it is. It's the only gap in the Dow that has not been filled. And so this is what we have. Now, last night, after being up 7.8%, the market got actually down on the day for about an hour. And then towards the end of the close, it ended up being up 2%. The other major Chinese market there, the Shenzhen market, is the Shanghai is the tech market. The Shenzhen is the industrial one, as I recall. That one was only up 0.1%, given the fact that they put all that money into it. So you kind of keep an eye on China because that's where the real money is, folks. I mean, Greece really is not very much. Now, I'm looking at this as a technical basis just on the amount of volume and the amount of capitalization that I'm looking at here. You know, the Greeks have very little. You know, China has a huge amount. Now, China's been in a big bull market for a long time that ended in 2007. You can see that from this chart here, because after it hit 73 and went all the way down to 18, it dropped 85% in value, making a beautiful ABCD pattern. And think what's happened now over the past year or so. In fact, it's been going on for several years. We've had a falling commodity prices, not just the things like sugar, but I mean major things like iron ore and steel and coal and crude oil and just about cotton. All of these things should be, being absorbed by the Chinese market if they are really, selling the stuff that they have. Now, the news coming out of China on the reports, I wouldn't trust any of them because they manipulate the reports, better than we do because they learn from us. So these are things that I think you've got to keep in mind, that this is the real problem that's out there, is what's happening in China, and the fact that I'm going to show you one chart here that just literally should scare the bejeebies out of you. But that's my job here, is to try to bring in a little bit of sanguinicity, I guess. I just made that up. We will see if we will, just it's just my opinion. Whether it means anything or not, I don't know. But this next chart is the one that really has a potential to be a really game changer. But it might be different this time. It might even be worse because of quantitative easing. And this is a chart that we got from Arthur Hill. He's a friend of ours from Decision Point, good friend of John Murphy also. But it shows that the volatility that we have here is as low as it has ever been in history. And yet we got prices way up in the air. And as you can see, when these things start to go down, you're going to have to sell. And the broker's going to ask you to who, because a lot of these people, they're already loaded up with margin debt. And this could be a really, really nasty thing. We have not had a 3% down move in the Dow in about a year, I believe, and then it was only intraday. We're seeing these all the time, with the Nikkei down 3%, almost 4% today, and Japan, Nikkei was down almost 4%. Hong Kong was down 3%. China ended up being up a little bit to unchanged, and then the rest of the markets are getting whacked a little bit. That doesn't mean that they're not going to rally, because the talking heads can come in there and give a reason why they're going to give Greece enough money to get by, which I think they're going to do, because if they don't, there's not going to be any food coming into that country to feed the people, and nothing gets people any more angry than if they can't eat. So this is going to be interesting to unfold, but I don't think it's Greece that is causing the problem. I know it's in the news everywhere, but all I'm doing is I'm just looking at what the Chinese market is telling us. The Dow Jones Transportation is also telling us the same thing. The goods are not moving. If this was really a bull market and things were good, the Dow Jones Transportation would certainly not be making new lows by a substantial amount for the year. It would be up near where the industrials are. Same thing with the utilities, but they're based on interest rates also. So, and I really don't think bonds are going to go very far either, because that's another asset class that is just, totally in a zone where, we've been 33 years now. We've been in lower interest rates. They've got to raise them pretty soon. I don't think they have to, but, the market's already raised them for them. So, we'll have to, to wait and see how this all folds out. The other part of this puzzle is, when you look at flight to quality that John Logan was talking about, we had bonds opened up 2 full points. I wanted to buy the bonds so badly on Friday. I just missed it. And now they gapped up 2 points, so you have to wait for some type of an intermediate pattern to try to buy it. But I think we could have a 7-point rally in bonds without any trouble at all, because they've came down, so far in the last year and a half. So they could get a huge rally, and that could be, called a flight to quality. But here again, I don't think it's going to mean very much, because, these things are started to turn over. When you look at the Chinese chart, where it is, and if you go back and compare it to what's happened in other economies that have done this, I think that China is looking at its first Great Depression, and I don't know how they're going to handle it, because many of these things that they're doing are they're new, and especially the the capital markets are less than 20 years old, because I started speaking over there in 1995 for the Merck, because they knew some of these things were going to be coming, and I helped open the Shanghai Stock Exchange that week a couple years ago in March of 2012 in their new building, which is a beautiful building, 93 stories high. But I think they're getting ready to experience that. They keep reporting GDP of 8%, 7%, 6%, but we don't know what the real numbers are. We know that export numbers are dropping, but you stop and think of how many people buy stuff from China as how many people, buy something from Greece. And that'll give you an idea of where the real problem lies. And that's what I see. The long-term chart, on the stocks for the U.S. still looks, extremely bearish. I got this from one of our friends over in the UK early this morning, and he reminded me of the fact that we are made some really important price and time parameters that came. We already knew this. They came in on March 19th. But that's basically, what we're looking at is this expanding triangle that we've had that's been going on since 1999 into 2001 when we had the World Trade Center. Then we made the top in 07, which was the home building too big to fail deal. Then we came down and made the low, and now we've had the biggest rally we've had in the stock market in history. We've only had one correction. That was back in 2011. We had a minor correction a year ago in the where it dropped down really fast and came right back up, the flash crash, but that was really an anomaly. So we're getting ready for something really big to happen here, but that volatility chart is the one that you should be scared of the most, because when you try to get out of some of these things, the volatility is going to make it so that they're not going to let you out of the prices that you want. So you've got to be a little careful in here. And I could be wrong, and I hope that I'm wrong. But I did a lot of research over the weekend. We're going to have a break here pretty soon. I'm going to share some of it with you, and we'll take a look at it here. Right now, we've got gold unchanged on the day, and stocks are getting ready to open, and we'll see where it happens.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, one of the things that I did over the weekend is I've got some very old books that I've collected through the years, and it goes back to what happens, during the times of the late 1800s and 1900s and 1920s and 30s. And I remember I studied the crash quite a bit, because I know someday we'll have another one, and I want to try to be prepared if I can. I was fortunate enough to be in the one in 1987, and that's been 28 years ago, so we're probably due for another one maybe in here, but who knows. But the chart that I posted in here was on the internet just recently. I was reading about it last night in the old books, because I remember what happened. It was, this shows on that chart, it was October the 26th or 24th. Let's see, what was the right date? It was the 24th of October in 29. They met in J.P. Morgan's office, and these were really, really big people. You had Rockefeller, Vanderbilt, and Andrew Carnegie, and Henry Ford, a whole bunch of other people were there. And they basically said, okay, we're going to prop up the market here. And the comment that J.P. Morgan says, I will say that General Motors will not go below $50 a share. That's the bottom. Well, it didn't go below 50, because when it got to 50 and an eighth, it gapped down. When Herbert Hoover called him back and said, why didn't you support, General Motors? And he said, well, I changed my mind. So this is the type of stuff that they've got going on in China now. I know they're probably going to handle it wrong, because it's a relatively new market, and the people over there don't have the experience of a market like this, because it's natural law. When a market goes up like that one did, parabolic, it comes down parabolic. Now maybe this time will be different, but $19 billion is a drop in the bucket when you've lost several trillion. Stop and think how much money the Federal Reserve in our quantitative easing put into our market each month. It was $50 to $60 billion, as I remember. And that's the main thing that you might want to keep in mind. Also, you have to keep in mind that the debt that the Chinese have is beyond comprehension. I'm going to post that chart in here. I've done that before for you, but I think you should see it again, because it's important enough to take a look at. All I have to do is to find it. I've got too many charts on here because I want to be able to cover everything that it's my opinion of whether it's important or not, but that's neither here nor there. Okay, there it is. I have it right here, and you'll be able to see it in just a second. But it shows the amount of margin credit that they've got out there, and you can see that also is a parabolic. That's the reason why it's going to have the problem. You'll notice that blue line is basically China. That's the Shanghai, that's SH, and SZ is Shenzhen, which is not too far from Hong Kong. And those are the big areas for the stock exchanges in China. So that's what we're dealing with right here. The overall debt that China has accumulated over the past few years, I've also posted that in here, and we'll look at that again. Oh, let me get this down a little bit. This comes from Business Insider with John Maudlin, and we'll take a look at that here, and you'll see it here in just a second. That they went from $2 trillion in 2000 to $28 trillion in 2014, and it's gone higher, since this time. So, you're talking 10 times the amount of debt that the people have, and a lot of these folks don't even have, the kind of jobs. I think the average wage over there is $8 to $10 a day, which isn't very much. In addition to that, there are these huge cities that are there that are just empty. I mean, cities for 20, 30, 40,000 people. There's a shopping center in Guangzhou, China, which is about 2 hours from Hong Kong by train. And if you were to go there, the last time I was there was in '06. It was just finished, and it was empty. They have a McDonald's on both ends of it. It's a mile long. There's McDonald's on the north, McDonald's on the south. There wasn't one shop that was and this was open, and there wasn't one shop that was there. I think maybe there might have been a Nike shop or something, but it was basically empty. I mean, people were walking by, it was just empty. The shops were empty, and it's still empty. And there's others around there like that. So they had this massive building of infrastructure, and they've not been able to use it. They were unable to convince the people in the rural part to come in to live in the cities, and they offered them these relatively low cost things, but they just didn't want to move. And why should they? They make virtually no money, so all they're going to do is increase their costs and expenses, and so that's why the problem arises. So China has some big problems. We don't know exactly because can't get inside the heads of them, but who knows. Okay, we're going to take a little break here. We're going to come back, and we're going to talk about the silver and the gold market.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to bring something to your attention right now because I think it's relatively important. We've talked a few times here on the show about the 20-man line. That's a line that where old trend lines come by and they offer support. As you can see here from the volatility index, that's exactly what happened on Friday. And right now, with the market being down a bit, I think they'll probably be moving up higher relatively soon. But there's one that is even more interesting since we were talking about China, and that is the FXI. And I wanted to show you the daily chart of this because this will give you a pretty good idea that we are setting right at that 20-man line right now. As you can see, it broke out above the 786 level. It did it with a gap. It doesn't show it on this chart because it's a line chart, but we gapped above the 786, and then it had its big run up into April 30th, and now it's had a 30% sell-off in the shares for Shanghai and Shenzhen. So right now we're coming right down to major support. I mean, it's setting on there right now. If we get below, 43.50, that would certainly, I would consider that a failure, because you should not close below that line. That's what Jim Twentyman said when he shared that with me 40-some years ago. But it's a very rare pattern, but we've seen it relatively several times recently, and it is a good pattern. We had it in corn, of course. We had it in the banking index. We have it in the VIX, and now we've got it in the Chinese market. So if you want to buy China, this is the time to buy it, because you certainly don't have to risk very much now. It's much better to buy it now than it was when it was 53. You don't have to risk much either, too, because about $1 a share is all you'd have to risk if you wanted to buy, the Chinese market. I will pass, because I am looking at something that is rather sinister, in my opinion, and I think it will be a fool's paradise to try to get involved with that, and then we'll see what happens, and then we'll go from there to see what's happening in gold and silver. But I wanted to share that with you because it is a rather important pattern. It's rare, but it does, it just takes time for it to unfold, and it's unfolding. So we'll follow it over these next few days to see if it, in fact, does hold that level. Okay, now let's get to gold and silver here. I wanted to give me a sec. Here we go. I want to put the two of them together here so that I can. Oh, that's not the one I wanted. Oh, darn it. Hold on just a second. Let me do the live chart. That's the simplest way for me to do it. I prepare these charts, and then what happens is I come in and I can't find them because I got so darn many of them prepared that it makes it a little harder for me to find the darn thing. So I'm trying to find out, and if I can find it, no, that's not it. Well, let me just do it live. Hold on just a second. Let's pull it up here. It'll only take a second here. Hopefully it'll still come up the same way that I got it prepared, and then we'll see what's happening. That's close enough. All right, we're going to start out with silver and gold together to show the relationship, because we've had a situation where silver is actually holding up much better than gold right now. It's had some higher bottoms in here, whereas we have not had that in the gold market. You see, gold market has been made a lower low than it did, way back in March, just almost exactly. So we're at some major support here. We'll start out with the silver here first, and then you'll see gold overlaid over the top of it, and you'll see that that's what we're looking at right here. So someone asked me a question: is what are the probabilities of me being wrong on this scenario that I'm looking at? And I don't know what the probabilities are. All I can tell you is that the charts that I'm seeing, these don't lie. That's the sum total of all the buyers and sellers. They can give you all the BS that they want, but that's what's really happening. I mean, we got a transportation index that's going down. We got a utilities index that's going down. We got a stock market that's going down, and we got the factors there that say it could go down a lot. So that's all I know. I've been here, done that before, so I don't know if that's going to be the case or not, but we'll have to just wait and see if that's going to be the case. We got a little bit of a rally going this morning. We're not quite unchanged yet, but we did get to the gap area in the NASDAQ and also into the gap area of the S&P, which could be positive. But after the first hour or two, then you'll have a better idea of what's going on. Now, on the short term pattern for gold, I wanted to show you what happened last night on Sunday night, because it was nothing really spectacular. All gold did was rally up to the 61% retracement of the high a few days ago back on the 28th. But what was interesting is that silver, that old high, was at 1577 per ounce, and it went to 1577.5 per ounce. It took out that high of the 28th of June by 1/2 cent, not even a full penny in silver, which is really amazing to me, but that's what in fact happened. So these markets are still appearing weak. We're sitting right at the 61% retracement now in gold, but it's still just I'm interested if it gets down to 1140, making that double bottom from where we were 5 months ago. There's several long-term ABCDs down there in gold. Then I'll take a look at it. But it had its chance up around the 1230 level when it couldn't push through that 61% retracement. And that told you that this thing was coming down, and it's dropped well over $80, $80 an ounce. We have the crude oil is another interesting one that is really set up for a potential buy. And give me a second here, and I will get that one here. Here we go. And we will be looking here. Just 1 second here. I'll move this up a little bit, and there we go. Wow, I hope this is, what am I doing wrong here? This is too small. Oh, I know what's wrong. Hold on just a second here. There we go. Yeah, this is what we're watching because we're right at a 382 retracement now. We went a tiny bit below it this morning. We went just a tiny bit below $54 a barrel. We're now trading at $54.50. So it's trying to hold this 382 retracement. But gasoline futures, they're not even at a 10% correction from the low that it made in January. The March low was made in crude oil, but the January was made, the January low for gasoline it's only 10% down from the high. So gasoline is probably the one, if you're interested in going long some of these complexes here that are giving you a chance to buy, then that's it. Remember, it's taken since May to July for the market to make a 382 retracement in crude oil. So that's a positive sign. So kind of keep an eye out for a place to get long crude oil in here is what I look at, because it's got a positive chart pattern. I mean, nobody wanted to buy it at 42. Everybody wanted to buy it at 62. And now again, nobody wants to buy it at 55. So we'll see what happens. But that's what charts are for. Separate the men from the boys. Okay. The other thing that I wanted to mention, I'm going to try to find some charts on iron ore and steel just to show you how badly these markets have been hammered, especially iron ore, which is, very, very important for building. And China has been the biggest buyers of that. And if we look at the Australian market, which they get most of their stuff from there, a lot of their raw materials, the raw materials in Australia are getting hammered just as badly as we are here, and the Australian stock market is also getting hammered quite a bit. So that's the bottom line of what we're watching so closely. So the old Chinese curse, may we live in interesting times. That's certainly what we're looking at here. But we've got a lot of things technically that are a little scary out there, folks. So I think that we ought to respect that, and we'll see what's happening. See, the VIX index is telling us that this is not going to be a big crash day of any kind at all. The VIX is only up 2. It should be up a lot more than that. So that's another thing that tells you that you're probably going to get some more of a rally in here. How much? I'm not sure, but we'll see what see what really happens. With this. Our good friend Mr. Z in our Dan here just posted a chart on iron ore, and it shows we've been going down. As a matter of fact, the iron ore is making a perfect Gartley pattern here, Mr. Z. I hope you see that, because right around 51 is a 61% retracement of the low that we made. I'll just put this in here because I think we can, then everybody can see it. I think I can do it that way. Oh no, I can't do it that way. Hold on just a second. Okay, move it over here. That should show you, but you're making a real nice Gartley here. Maybe this is a bounce, and maybe everything I'm looking at is wrong. I don't know, but these prices have come down, quite a bit. The long-term chart on iron ore, if you looked at that, I think it goes down. This has just been a bounce from 46 to 60. It's been going down a lot lower than that. I'm not sure. I have to double check these. All I know is what I was looking at from previous history about steel and some of the other things that were going on. So we'll see. Okay. Next question that we had, don't have any questions in the den. So if you have any questions, 877-927-6648. I want to post a chart of the transportations because it's at very, very real critical levels here. The fact is, let's just do it live because we are at a level here where we're probably going to have a gap of some kind in some of these things with because these people put their orders in usually in the first hour or so of trading. No, the transportations are doing very little. They didn't gap down below anything. They made a little bit lower low than yesterday. Didn't do much, so that's holding up okay too. That's also saying that there's not going to be a panic coming in at this level, but we'll just take a look at it here. Okay, we've got a caller from St. Louis. Edwin, are you there?
Yes, I'm looking for FCX. Is that a double bottom, and is that based on the Aussie dollar? That's why it's trading so bad, and how low can we go?
Boy, there you got me on a couple questions here, partner. I don't even think I have FCX in here, but let me double check.
Or
oh, FCX. FX. Yeah. You mean FXC?
FXC, yeah.
FXC, yes, I have that. Let's just see what that is. And
FCX.
I've got FXC. So let me do the
FCX. They trade
FCX. Hold on, let me see.
Yeah, the world's biggest mineral things. Somebody told me they trade on the Aussie dollar. That's why they're getting beat up so bad because they're overseas.
Oh well, yeah, I can see that's been in a really big downtrend here. Wow, I wouldn't touch this.
No.
Let me look and see if it has a double bottom here. Let me just get some more data. No, this is not a double bottom, but let's just do the weekly here, and we can get a better idea. Well, you're right at the 786. You're at major support. Hold on here. Let me post this in here, and you'll see you're at major support at the 786, but you're actually under it a little bit. I couldn't touch it here. I'd have to wait on this. This looks like it wants to go even lower, so I would hold off on that. I wouldn't touch it here at 1773.
It's sort of like Val. They do the same thing. The book value is $15 a share, but you think we can go lower? Hit that 1643?
Oh, the chart. It could get down to 10 without any trouble because it got down to 9 back in 2009. I would look at it there, but I wouldn't touch it here.
No.
No.
All right.
Not with commodity prices falling as they are. I wouldn't touch it. I really wouldn't.
Do you think the government can split the dollar and that'll get us out of the recession?
I don't think the government can control much of that kind of stuff, and I don't know anything about splitting the dollar. All I can say is that we're in a deep quagmire here because of quantitative easing, and I don't know how it's going to work out, Edwin, but I'm afraid it's going to work out badly.
Think we'll have another war? We need a good war.
Oh well, we'll have a war. That's a given. It's just a question of where it's going to be and how bad it's going to be. Wars are inevitable.
You think they'll take our money and not let us take our money out and take 30% of our deposits and use it to pay down the debt?
No, I don't think they'll do that, but you never know.
Why can't we default like the other countries do?
A lot of people try it, but, it doesn't work with us. We're the policemen to the world, so we can't do that. We've got to have some responsibility. So.
Well, we're going to have to let Goldman Sachs go figure it out. I guess all the big boys that run the world from that organization, the crime organization, Goldman Sachs, right?
They probably have a better handle on anybody, my friend. That would be my guess.
Ponzi scheme. Get Blankfeld out of jail. Well, he's not in jail yet. He should be in jail, Blankfeld. All right, you have a good day. Bye.
Thank you for calling in. I appreciate the call. Okay, folks, now we are having pretty good rally. We're almost getting back. Well, we're only down 11. We're only 11 from the unchanged in the S&P. The Dow's still down 116, but it's still early. We could still have a more of a rally. Fact is, you could get it up 150 on the day. You don't know with these kind of markets that we have now that they certainly are able to come in and do certain things with the markets, and that's all you really can do. So we have to wait and see. Okay, now the next thing that we're looking at here is going to be the price. Well, we got all the way up to 4007 in the 4407. We've made the 61% retracement in the Nasdaq just now, and we're doing it in the S&P. We'll be right back after these few words.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I'm going to wrap up the show now and show you the New York Stock Exchange Index. You notice that we did gap down. The important thing is that last week we did break below the lows of June 8th, which was in a very important cycle low. As you can see on the chart here, it was basically a 2-month cycle, and we crested real early in the cycle. That's high translation to the left. That has a very, very bearish connotation. That basically means that we should be lower than in the month of July. Now, we're going to have Norm Winsky from Astro Trends is going to be our guest, I believe, on Wednesday. He's got some cycle dates that are coming up that should be pretty interesting to watch. Now, the next key chart point on this chart here is the March 11th low. We're below the 786. of that level now. We gap below last week's low, which means we've taken out last week's low, but we still haven't taken out the low of March 11th. When we take out the low of March 11th, folks, that was one of the most important lows in the past 7 or 8 years. Let me see, it was not as important as 09 March, and it wasn't as important as July of 2011, but it was the third most important spot from a standpoint of geometry and harmonics of looking at the Fibonacci summation sequence. So we are starting to break down from these levels, which we have been doing. Now, the NASDAQ has not broken that much. We came down 100 and some points from the high, but still, it's the one that rallies back the fastest. Everybody's looking for, value and stuff like that. But this is going to be an interesting time here because these markets are breaking down, and they're coming in at a time where we have low volatility, which is bad because that means a lot of people can't get out at once if they want to, because volume has been dropping, and that's not been a good sign either. So just protect yourself as best you can. But I think some nasty things could be coming. I believe they're going to start in China, and we'll see if that is going to, be the case or not. But that's what the charts are. And I'm a chartist. I'm not a fundamentalist. I'm not an economist. I don't look at supply demand. I just look at the buyers and the sellers, go back at history and see when things have happened before. And that's what I'm, trying to look at. So I want you to live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.